Hey everyone, Joel here. In today's video, I had an interview with Andrew Xia, a financial consultant. Andrew is a good friend of mine and he has a wealth of experience in the financial markets as well as the insurance market. In this conversation, we talk about insurance, what are the common misconceptions about insurance, what are the common mistakes of people when dealing with their insurance policies, and many more topics. I really enjoyed this conversation and I certainly hope you do. Alright, without further delay, let's jump into the interview right now. Hi Andrew, welcome. It's good
Hi,
to...
Joel.
Hey,
Thanks
hi.
for having me.
Thanks. It's great to have you here to share your experience and views about insurance. I really appreciate it. What I hope to achieve in today's conversation, right, is to give the audience and listeners some perspective on insurance. I mean, for me, I always have a hard time understanding insurance and and all the subtle nuances that we have to know. But I mean, to me, it's quite difficult to understand. So, and I'm sure there are many people out there who have the same problem as me. So I think it's great to have you here to share your views and maybe clear some misconception and things like that. Okay, so before we begin, could you share a bit about your background?
Okay, Joel. I graduated about 25 years ago, or about 30 years ago, actually. I went to NUS Law School. I became a lawyer. I practiced law for about 4 years. When I got married at 29, I switched to banking. I joined Citibank to do equities because I have a deep interest in investments. I spent almost 20 years in banking. My last 10 years was in private banking where I was a senior advisor. I did everything when it came to equities. I focused on Singapore, Hong Kong, and US shares. Not only just shares, but derivatives, structured products, anything that involves helping the client to make money when it comes to shares. Uh, Unfortunately, when I reached 50, given the trend in the financial sector, I had to leave. And because I have deep experience as a person who not only works in the financial sector, I am also a very good example of the decisions that I made when I was 25, 26, towards 50, and now I'm 55. What are the result of the implications? So I decided to join the insurance sector with Great Eastern Life,
Okay.
share my experience and help people. So that's where I am today.
Wow. So you have actually a wealth of experience in terms of banking and then currently in insurance. So definitely a lot of experience in this area.
Yes.
Wow. Okay. So just curious, what do you think are the common misconception from people about insurance?
Okay. Insurance to me, I learned this quote when I first joined, and I think it's very, very descriptive. Insurance is for you, a person, to give me, the insurance company, a small amount of money, which is the premium, when you don't need it, such that when you need financial support, the insurance company pays you back a much larger sum of money. So what insurance does is to transfer financial risk. So
Okay.
because of this, insurance works best if you use it for protection and to help to prevent you from suffering not only for your health, but from your financial side if you get a major illness or unfortunately death or disability and your family suffers. Okay, so insurance must be used for protection. I feel that the misconception now is a lot of people want to use insurance to do more things than just protection. Second thing is they feel that also some other people think that insurance might not be worth it because they find that you're paying a lot of money for something that you cannot see. But what they don't realize is that when you need insurance is the time that you cannot get insurance. So insurance is not an expensive product. Insurance is not a product that will solve all your problems. It is a product that works best for specific periods.
I see. Yeah. So, okay, yeah, from what you have shared, I mean, just to summarize, you said some misconception is people tend to want to use insurance to do more things for them. And then second thing is some people feel that it's not worth it because they can't see any difference right now. And then
Yes.
the third thing is insurance must work for the people's, I mean, on their own needs, right?
Yes. The key is the insurance is not there to cover every form of risk. It is to cover what is the most important risk. And I feel that most people think they have to pay a lot of money. You don't have to. You have to spend within your means. Don't overspend on the premiums and to cover what is the most essential risk that will affect you and your family. So if you do that, then you don't have to worry about insurance being too expensive or not useful.
I see. Great. Okay, are you able to give us a brief summary on the types of insurance? Because I think in the market there are so many types of insurance. I mean, different kind of plans for different people. Maybe could you um, enlighten us on the different types of insurance?
Actually, insurance is a very simple product. You can split broadly into two categories. One is protection, catastrophe. The other one is savings and investments. Okay. Myself, insurance works best if you use it for protection, which is to prevent catastrophe. So under this group, we have things like hospitalization, we have term and whole life plans to protect you for death, against death, disability, and critical illness, and accident plans. Okay.
Okay.
Then on the other side, we have savings and investments, which some people use their insurance to do endowment products and for investment-linked products. So
Okay.
if you just think in terms of protection, savings, and investment, then it is quite simple. These are the two broad categories.
I
For
see.
myself,
Mm,
I feel that you only need to concentrate on the protection side. So, which means get covered for hospitalization, death and disability, maybe if you're young enough, some savings and accident plan. These are the most crucial things that you consider.
I see. Okay. Just now you mentioned about term insurance and whole life insurance. I think I think many people are also considering, should I get term or should I get whole life? How would you advise these people?
Okay. So for both term and whole life, traditionally cover the same thing. They protect you against in the event of death, total permanent disability, plus critical illness with an option. You can option to put in additional critical illness, but the main plan is death and total permanent disability. So the whole life covers the same thing. The main difference is this: a term is limited by a term. So you can buy for a specific period 10, 20, 30, 40, or 50 years. Once the term ends, you have no more insurance. Okay?
Okay.
The whole life plan covers you for the whole of your life. So, a whole life plan, if you keep the policy going, is in a way a sure thing because you will pay out. Because all of us will end in death. And when the death occurs, the whole life plan will pay out the protection sum assured plus whatever bonuses they declare. The other difference is the term is the most affordable insurance because you just pay a small amount of money just for the insurance. And after you pay, you get nothing back. Whereas the whole life gives you, apart from the protection, it gives you a savings component. So many years from now, if you think that I need the cash, you can go to the insurance company, get a loan, or surrender the policy and get the cash back. That's the difference.
I see. So, in terms of premium, are there any difference?
Depending, okay, both the whole life and term, all premiums are determined by your age group. The younger you are, the more affordable it is. However, the difference between a term and a whole life, the premiums is about between 3 to 5 times. So for every dollar you pay in term for a whole life, because they also use the money to save for you. You can pay $3 all the way to $5 for the same amount of protection. So that is the key difference. So term, if you're looking for something that is really affordable but limited to the time period, then you look at term, but you get nothing back.
I see. I see. Okay. Um, Now, for let's say for people of different age groups, say let's give two examples. One person is 25 years old, and then the other person is 45 years old. How would you advise them to do their planning in terms of, I mean,
I
insurance
think,
planning?
well, for a person who's 25 or 45, to me, the most important thing is they must be covered for 3 things. First is hospitalization.
Okay.
Okay, for hospitalization, if you're Singaporean or you're a PR, we have the benefit of getting the best plan. The Singapore government it gives everybody a MediShield Life, which is a government-sponsored plan for admission to Singapore government hospitals. We add to it Eastern Life integrated plan called Supreme Health. That one will enhance your coverage all the way up to 1.5 million and allows you to stay or to even in government hospitals able. So you
Mm,
must get your hospitalization covered because that is very important.
okay.
Once you do that, then you should make sure that you protect if you are single yourself with a term plan or a whole life plan to protect against death and disability. And if you can afford it, to put something for critical illness. The final thing you should think about is to look at the accident plan because it pays out if you get into and reimburse whatever bills you incur to cover for unexpected small financial setbacks. So just these 3 plans is good. Subsequently, if you want to look at savings and investments, my approach is to introduce you to other financial instruments because they can help you to achieve your savings and finance investment plans better than insurance. So for 5 and 45, it is just to look at hospitalization, whole life plan for death, disability, and critical illness, and accident plan. For a person who's 25, because he's younger, the premiums are not expensive. I would suggest he buys a whole life plan instead of a term plan. Because, first of all, to cover himself, he will not pay a lot of premiums. And most importantly, when he is my age, 55, 60, 65, this policy has a certain cash value, which is more than what he paid. So it becomes a form of saving. And the rate of return is, given the current environment, between 3 to 4% a year, which is actually very decent. For a person who's 45 years old, if he has no whole life, if he has no protection, then I suggest just buy a simple term plan because everything else is very expensive. So
Yeah, thanks for the advice. I mean, just I mentioned about accident plan, I also realized how important it is due to my recent injury. You know, my back was injured in January, and then I went to orthopedic, and then the cost was almost total up to $3,000 just for the medical bills and the medication. So fortunately, I've accident plan to cover, so I was able to claim it. Yeah, so like what you say, the transference of financial risk is super crucial here.
yes,
Yeah.
and the good thing about the accident plan is I'm sure you didn't pay more than 200-300 a year for this, and you can get back $3,000. I mean, for whatever bills you incurred, and the Great Eastern Life Accident Plan. is per accident. So if you injure your leg or you injure your hand, each time you can claim separately. Okay, it depends on the accident. So I'm glad you got one accident plan. It's very good.
Yeah. Yeah, that's very important. The bill cost me a bomb, man. So fortunately, I have this plan to cover. Okay. Now, I remember when I just graduated from university, and then my friend also just came out to become an insurance agent, or now we call them financial consultant. I mean, she got me to enroll in this endowment plan, and then I find that the returns are not as good as what I think. I mean, what do you think of it?
Personally, I don't sell or I don't promote endowment plans because endowment plans are limited by two disadvantages. The first disadvantage is it is term. So endowment plans are usually sold as education plans for parents with young children.
Okay.
What I feel is lacking about this is you have to put in a much higher amount a year in order to make some form of decent returns. The other thing is most of them expire after 20 years, between 15 to 20 years. And after the thing expires, we get back a lump sum of money which doesn't want to be more than 1 to 2% a year gains. And then when it expires, you don't have any more insurance to protect you against death or disability, and you have to start all over again. But by then, you are much older, and then you have to pay a higher premium and start all over again. So for people who are looking for endowment, I only recommend that you should actually, instead of buying an endowment, buy a whole life plan. Okay, don't worry about the 20, 30 years because if you can afford to keep a plan going after the 20 or 25 years, this plan becomes more and more valuable. You will accumulate more and more good savings. So even for a person who is starting out at this current juncture, I would
Mm,
not recommend any plans. I think they are a bit too expensive, and your returns are not as competitive as compared to, even if you just buy a Sing dollar bond or if you buy some Singapore REITs, which, I think that the risk and reward ratio is much more enticing.
I see. Yeah, I mean, I can understand, given from your experience in banking, probably you're able to do a more sound comparison between the returns of endowment versus other financial instrument.
Definitely.
Yeah. Okay. Um, the next thing is, a lot of people are complaining that their insurance premiums are costing them a lot of money in terms of their budget. So, what would you tell these people? Is there any advice for them?
Mm, I think, okay, so that is not a very easy way to solve the problem. I feel that for most people who feel that their premiums are too much is because they feel the need to insure against all types of risks. In life, there is no certainty and there is no 100% protection against all types of risks that can. So if you buy a lot of unnecessary insurance products to
Hmm.
cover you for different types of risks, then I think you should have a chat with me to cut out what is not important. The most important thing is if you just focus on hospitalization, plan to cover for death, disability, and critical illness and accident plan, then the premiums should not be very expensive relative to where you are earning. Okay. For myself, most of my clients, and in the last 5 years that I've gone into this business with about almost 400 cases, most of my clients don't pay more than 1,500 a year in premiums to me, to the Great Eastern Line. So that works out to be a very affordable $100 to $150 a month. Right? With $100 to $150 a month, I feel that they can adequately cover themselves for these three essential needs. They give you, if you want to enhance it to, because you are a high income net worth, then of course I can help you to structure a higher. So if you find that you're paying $8, $10, or $12,000, I think you are really paying too much, and most of it is probably related to savings or to savings with an endowment or investment linked product, which I feel is not a very efficient way to use your hard-earned money.
Okay. Well, that's sound advice. Well, so how can people find you if they want to find out more about how to learn how to reduce the premium, or looking for some advice in terms of better planning? How should people find you?
I have a website. It's my name, andrewsia.life.
Okay.
Or you can WhatsApp me, or rather you can email me at SIATM, as in Thailand, Malaysia, 333@gmail.com.
Okay.
I quite I look I'm quite responsive, and I'll definitely help you to plan properly. I'm 55 years old now, so I just got my CPF, so I know what products work and what products don't work when you need to. So I'm at the age where, fortunately, I made some good decisions, so I'm financially secure and not under some financial pressure. So I can definitely help you to plan your life better.
Okay. Wow, that's great. Well, I'll definitely put your website URL and your email in the description. And then it has been great. It has been a great pleasure talking to you. And then I hope our conversation can really help people to understand insurance better. So once again, thank you very much for this to share for taking your time to share your views and experience. Really appreciated it.
Hey,
So
you too.
yeah,
Thanks a lot, Joel.
yeah, no problem. So hope to see you again. All right.
Sure.
Okay.
Great.
Take care.
Take care.
I hope you got some valuable information from our conversation. Hit the like button if you like this interview. From my interactions with him all these years, he is someone with high integrity and will only recommend policies that meet your needs. He will never sell you any plans that do not benefit you. If you are planning to do any financial planning, I highly recommend that you speak to him for some advice. I'll leave his contact details down below. That's all for today's video. I'll see you in the next one. Bye.